right, hey there guys, Sam here from TradeDevils.com and TradeDevils-Indicators.com. Today we're looking at the latest updates that we have made to the market structure indicator. Now we've added a few features and we've changed the user interface a bit. I think with this we end up here with a more powerful, user-friendly version of, well, what is really a very unique indicator, certainly in the Ninja space. So let me just go through this quickly here in terms of new features, and then we'll apply it to a chart here and see how this can, perhaps create some new opportunities or your ability to identify where there may be trade opportunities. Right? So we're just looking here. This is I've got a 900 tick chart of the NQ. Thought we'd mix it up a little bit because we so often look at the ES. So on the chart here, as I always do, I have our initial balance indicator so we can frame the day from beginning to end. I also, as I always do, I have our toolbar, the Trade Devils toolbar up here because I use these tools so frequently. I think that's everything. And then I've got the market structure, of course, applied to the chart. Now, the only thing I have right now is actually the market structure and the market structure mapping based on breaks of structure and changes of character. So the first thing you'll note here is this bright blue and yellow box up here, where what we've done now is we've given you all the controls about all of the parameters that you might be prone to be changing or working with or tweaking throughout the course of any trading day, and just given them to you here now in a drop-down menu. So you'll see as it sits right now, it's identifying the chart type and in this case the tick count that we're working with. 900 is one of two I like to use for my execution chart for the NQ. I like a 900 or a 1350. Those are both particularly good. The 900 here is really I think is a good choice here because we're seeing the change of trend throughout the course of the day. Now, of course, Friday's an unusual day. Here's the jobs report, and then, as is so often the case on these days, we have just massive market manipulation here. So, of course, the market dumps, right? So retail thinks, oh, it's going to be a big down day, and then they rip it. I don't know how many points. I mean, from the open, right? This is how they take advantage, right, of the public. So when we go 800 ticks up, then we go 900 ticks down, then 600 up. Right? It's just these days are really ripe for market manipulation because you have people trying to guess, based on the outcome of the report, which is that's a dangerous way to try and approach the market. But I digress here. So let's just go through the new features here. So you'll see now, and this is just per my color coding. I like breaks of structure to be in the dark blue, and I like the change of character to be in orange. Now I have this set to show us change of character. One thing you'll note here is that when there's not enough space, when I compress the chart here, these will just disappear because there's not enough room for that text to come in there. But open it up, and then they pop back in. So what we'll start with here is just some of the choices that you have with regards to how you're setting this up here. So let's just go through them one at a time. So first question you have is turning it on and off, right? Which may be something you might do based on other indicators or the features you might be working with, or anything else you might have on the chart where you may want to just quickly turn it off. Right? That may be something that would be appropriate. So if you wanted to do that, well, you can do it quickly. Now here, show trend on. That's going to be a function of what do you want to see here per the latest break of structure, what that trend is. Right? I would encourage you to keep this in context of what the higher time frames are suggesting as well, rather than just lean in entirely to what you see here on what would likely be a shorter term execution chart. So for example, I keep a 15 and a 60 minute over here. So I'm watching the trend here, and then relative to the trend on the execution chart. Just something to consider. Keep that in mind. I wouldn't lean too hard into this. I would be looking for context on say the 15 minute or even the 60 or a 240 if you prefer. But so I digress again, just to kind of put that in context so you don't get overly dependent on that. Okay, to our drop-down menu. So first choice we have is number of breaks of structure to determine the trend change. Now, you can go one or two here. One a little more aggressive, and I might suggest the one is a good place to start. And this is how it will come to you as the default. One's going to create more opportunities, as you'll have more breaks of structure that will create more supply and demand zones. So that's something to consider One, break of structure would be more aggressive. Two, you're waiting for that confirmation, because then you need that second break of structure, which if you went from uptrend to downtrend, it's confirming that you get a lower high and then a lower low. That's really up to the trader's discretion as to what you'd prefer there. I think starting with one is a good place to start, right? If you find that it's problematic for you, then back it off and go to two. Multi-time frame off and on here. This would be if you were limited on screen real estate and you wanted to have both an execution chart. Could be a 900 tick, could be a 1 minute, and then a 15 minute in the background. Just as you've seen before in prior versions, we do give you that capability. Now, to turn that to set that, you would need to go into the parameters under multi-time frame and say, okay, I want the higher time frame to be the 15 minute or the 1 hour, right? Then once you have that set, then you can turn it on or off here, right? I don't have it set here because the way I use it here, I keep a 15 and a 60 over here, so I can just quickly look at it. But if you were limited and you're just working off a laptop, you didn't have the screen space because you wanted multiple markets, that's an option for you. So we're putting that right here to turn it on or off. Now here, this would be strong highs and strong lows. I don't know why you would want to turn that off, because that's a good reference. You might want to turn it off. You may want to experiment with turning it off on the internal swing structure, so you're just working on the higher swing structure, less than the internal. That may be something you again experiment with, based on what you like. So you can see here I've got the weak high at the larger degree, and then the internal range strong low. Right? Is that some may find that to be too much, right? So they don't want it, so they just turn that off. Now you're just working off of the last. And that I should note here, the dominant swing structure, that's always what the fibs will be working off of, right? So you see here's the 50, 618, 786. Here, we'll get to that in a second. I don't have the labeling on here because I always use the same color, so I know what they are. But just here, I probably ought to just demonstrate that so you understand what that's doing, right? So here's 50. 618 per golden zone, and then if I'm drawing it, I always have the golden zone. Then I have 764, 786, right? Just so you see it, but it's a good eyeball reference. Really, what you're trying to identify there is when do we get into the discount, right? So if we think of it this way, discount being when we get under the 50%. Right now we're a discount. Here's premium, right? So just so you understand what those are doing. Let me just keep going here now. So since I'm on that here, I could turn them. I could have them as lines or as a cluster, which I prefer. I could have the fib levels, right? So now you see them, right? If that, there might be something that you prefer. Again, we're just giving you that choice to have the labels on there. If you use the same colors, you probably don't need to do that. It's just one, declutter the chart a little bit. So I suggest you turn those off. Use the same colors. All right, let me keep going now. Okay, where did we leave off? Okay, so show internal highs or lows. I'll go back to that so you see that internal swing structure. Highs, lows, on or off, right? Do you want them on or off? I don't know why you wouldn't, right? It's helpful, right? We see that series of lower lows, lower highs, right? And then we start to come back the other way. Here's where we get a higher high. So I think that can be helpful, but again, if you prefer to have them off, take them off. Now, break of structure type, this is just what do you want to see here? So I could make it text and time frame, so it's going to say break of structure of a 900 tick. Where that can be more useful is if you're using the multi-time frame, so that you might look here and say, oh, am I breaking a 15-minute pivot here, or is this just on the 1 minute or 900 tick, whatever the case may be? That's the purpose of that if you were using multi-time frame. If you're not, I would suggest either line only or just text, right? So you know it's a break of structure. It doesn't bother me to have the text on there, but some people it might. So again, we're just giving you that capability here. Now, with regards to the actual break of structure mapping, the default will come to you that to qualify for a break of structure, you need a candle to close beyond the prior pivot. So you see here, we have this one little bar that breaks it by a wick, but we don't actually get the break of structure until we get a bar that closes above it. Right here, we get that close above. My suggestion is, and again, it's up to your discretion, but my suggestion is candle close on break of structure, but wick on change of character. right? But again, you change it to your heart's content. So break of structure, candle, close. These are the defaults. I think this is a very good place to start. Of course, if you increase the ATR range, you're going to see far fewer breaks of structure, and you'll have fewer supply and demand zones. If you take it down too small, well, you're going to have perhaps more than you want. So this is a very good starting place, but do a little experimenting, see if that's a good fit for you. Now, same thing here with change of character. Do I want text and time frame? Do I want none? Right? Some people might just want none, right? They don't want the change of character. They just want the breaks of structure. Something to consider. I think these can only add value as you see those changes of character. So line only or text probably just fine. Again, remember, if there's not room, it'll take the text off until it can find a spot where it can fit it. On the structure mapping here, again, here you can do candle close if you prefer. My suggestion is to keep it a candle wick. So wick, here I've got something else on there. So if you've got it's set to wick, then just a wick through the prior pivot will be considered a change of character. Right? So again, up to your discretion. How many do you want to see? If it's too many, right? If you don't want them all on here, you can just set the number there. This we just talked about. Do I want fibs on or off? Right? I can just turn them off if I prefer to draw them, or do you want to see the numbers? Right? We just looked at that. Now, new features here. Well, let's focus here on the supply and demand zones here before I make that distinction between supply and demand zones and order blocks, as you can see right here. So first, let's talk about supply and demand zones here. Now, as you've known this in the prior version, I'm going to just turn these on to breaks of structure. Okay, so this is what you're familiar with per the prior version. So with a break of structure, as we see right here, we get this break of structure, we're leaving behind a supply zone. Now, I'm choosing that language very deliberately here because this is often referred to as an order block. We're going to make that distinction here, and I'll show you why in a second. We're going to make that distinction between a supply or a demand zone and an order block. So per the way we're using the terminology here, when we have a break of structure, we are leaving behind, in this case, because it's a downtrend or a move down, we're leaving behind a supply zone. If we're heading up here, we're leaving behind a demand zone. Now, I have it currently set to show the full candle of the range. Now, one of the things that you may find based on the time frame that you're working with is that if you have it set, if you have the demand zones set to show the full candle, there are times where the size of the candle is too big, and it just can make the bar, the zone that draws across your chart just way too big. So you have the option to do it just on the candle wick, right? So let me get the measured moves off there. Hang on. Let's get them off here. So now you'll note here, so it's almost like it's just notifying you that there is one there. Now this is, certainly it reduces the number of zones that are drawn across and frees up real estate on your chart, but it's also easy to miss one. So for example, we've got a supply zone here. Now, would you have remembered to draw it? Right now, okay, I mean it's right there, but just remember, I mean the trade-off there is that if you get a very tiny wick like you do here, you're not even going to see it. Let me take that off, right? So that's just something to consider. Now, if I go back to it, and again, there are times where I will go back and forth between the two, which is why I wanted to have this. So if I go to candle here, and then I recalculate, it's gonna put those measured moves on. So see, now I'm not gonna miss them. Right? I'm not gonna miss that beauty. I mean, how pretty was that? Right, and you see the same thing here, and then up here again, all we saw was the line because the wick is so tight. The wick is so small. The same thing down here, right? So that's just something to keep in mind. It's just giving you some flexibility. But if you were on something where there was a giant candle prior to the break of structure, then the size of that can be too big. So it's just a convenience factor. I often will start with it on wick. Let me recalculate and get those measured moves off. I will start with it there, but if I'm finding that just for whatever reason I want to see them or they're too many, I don't want to draw them all, then I can just quickly change it back to candle. Right, so we do that, we go to candle, I'm going to take the measured moves off, right? So just because I don't want to get ahead of ourselves there. So just looking at these alone on the breaks of structure, I'm okay, all right, these are pretty good right here. This is pretty good right here. Didn't quite get there here. We'll look at that in a second. Now, keep in mind here, right now as it is, I'm only showing breaks of structure. I'm only showing supply and demand zones on break of structure. Here's another one. Pretty good, right? So you see, if you've been through the training and you understand conceptually what's happening here, why this is, let's just call it an area of interest. Why this would be an area of interest. Right, because this is gave us the breaks of structure that we come back here. Reasonable to anticipate there'll be defense here, that there'll be potentially unfilled orders in the book, that everybody didn't get the price that they wanted here. So we have even in the first trip, right? Let's assume you're not going to get all of it here. I typically will be stopped in on the break of a bar like that. Well, there's 97 ticks there. Right, now, are you going to get it, tick to tick? Right? Probably not. But the bulk of it, there's 80 ticks. Right, you get about $350 off of that initial move. Now we get a return trip. Again, I mean, are you going to get all of it? Well, maybe not. I mean, here would be the first target, the prior low. That's 127 ticks. Right? If you had a runner and you kept going, well, now we're at 232 ticks. Right? I mean, these are areas to pay attention to. Let me get rid of those and we'll keep going here. So let's go back to where we were before. So I've got the supply and demand zone sets to candle. Now keep in mind, I can also have supply and demand zones shown off of change of character. So with just one click, now I've got change of character. Now it may be such that you wouldn't want to have just change of character, so the other option is have both. Right, so and you'll see where there are times where they're both together. So here I have break of structure and change of character. So you see the extra, the zone on top of the zone. So this being a particularly strong zone. I think that's the only, we get a couple down here as well. So as talk about some great examples, right? Talk about an area of interest. Right, so we've been. This is just a great example, right? So we're in this raging downtrend, then all of a sudden what happens here, right? We don't get a new low. Right, the first ingredient to, maybe I've got a trend change. Now change of character. Right, I get a pivot, come back down, and I get another change of character. So essentially I'm coming all the way back down here, and I go right to the 50%, right to the 50% line, and then I get a monster coming off of that. Oh, there's a number of things you might look at here. I mean, this is a nice example of a channel, right? We get a channel break, right? The original price action godfather, right? Al Brooks, a break of a channel trend like that. The implication is that there's going to be a push to break that high, right? The first break sets it up, right? Because that's when retail sells it. Right, you get an opportunity here. So with that, you had a good chance here that this was likely to, at the very least, go up and challenge this high, right? Which it does, breaks through nicely, ends up breaking structure. What does it run into? Right, supply zone up here. So these are definitely worth. Here we don't quite get there, right? This is definitely heads up. I mean, you could have waited the entire day for that trade right there, the entire day, right? Oh, let's assume you're not going to get the pivot low, right? I mean, if you took that all the way up. 365 ticks. Are you going to take it all the way up? Right? I'm not saying you would. I'm just saying that was the opportunity that was there. Right? Always easy in hindsight, isn't it? Okay, so let me take those off. But I'm just kind of showing you. All of a sudden now this just got a whole lot easier to work with, because I was the first one to tell you it was kind of a pain in the ass, because I would change back and forth between wick and candle on the supply demand zones, and it was always I got to load the indicators, that takes a minute, then I got to switch it, then I got to apply it. That was always kind of a pain. This makes it really fast and easy. Now let me keep going here. So so that we can focus on the new features here, I'm going to turn supply and demand zones off. Right, so now we're just back to the market structure, right? The swing structure. Okay, new features that we've added. Now here this is what we are now calling an order block. So I'm going to turn order blocks on. All right, now let's go over what we're using here to define as an order block. Okay, so here's just find some blank space here. Okay, so essentially we have only two patterns here, but bull bear that we're looking at for the way we're defining a setup for an order block. So the first being rally, base, rally. Okay, the second being rally, base, drop, right? Or you might have it go the other direction. So then you might have drop, base, rally, or then the other version coming down would be drop, base, drop, right? Oh, get off of there. Right, so this is really what we're looking for here, and the idea being that at these base levels, or even at the launch level of these, there could be opportunity here. This because something has happened here to cause. This is the pause, right? So if we would come back to this, are there potentially unfilled orders here? Same thing up here, right? If this is a base, if we were to come back to that, as we do here, if we come back to that, that would be an area of interest. Same thing on down below. Is this potentially an area of interest? Same thing over here, right? If we're basing here, if we now come back to that, if we retrace back to it, that may be an opportunity for the trend to continue. All right, so with that established here, let me here. I think I've got some more over here. If I didn't already delete them all, I think I did. Okay, so let me get rid of that. Okay, so the criterion, in addition to that pattern that we're looking for, and let's go look at it in the indicator here. So if we are showing order blocks, right now I've got tested order blocks on, and I've got we'll circle back to showing broken order blocks, so just so you can see that while you're going to see a lot of examples of order blocks that held, there's certainly, as of course, there are going to be order blocks that are broken. So the minimum number of bars for a base would be 1, right? This is the default. This is how it'll come to you in default. I suggest you stick with these, experiment a little bit, but if you make the number of baseline bars too many here, then you won't get any order blocks. If you make the max number too many, again, it'll reduce the numbers here. So this is a good way to start with it. Now, in terms of the base bar percentage and the thrust bar percentage, okay, so I'm going to have to draw that over here. So let's do the base bar first. Okay, so let me just bear with me here while I do a little drawing here, and let's get this one over here. Okay, so for a base bar, that looks about close enough here. So let's get the thrust bar. In this case, we'll use an up thrust, and let's do it. Give me my little line tool here. We'll do it this way, and we'll do it that way. Well, you get the drift. Okay. So the idea behind the base bar is that we want. Oh, maybe I have to make this smaller. We want the base bar to be 50% or less of the total range of the candle, from low to high, right? So this is the implication here, being that this is indecision. Right, we have indecision here between bulls and bears. So the market is pausing, resting, basing. The thrust bar, the body of the candle, must be in excess of 100% the range from high to low. This becomes the thrust bar. So if we now take that and we go look at some examples, we can go right here. I see a really nice example right here. Okay, so let's zoom in there so you see it. Okay. So here's the idea. Let's put it in the context of those patterns. So it takes a minute to adjust to this. So we get drop, base, drop. Right? That's the pattern. Now when we return back to the base, right, potential opportunity here, because the thrust bar that came out of here, you'll note here, right? So you can see the body of the candle is in excess of 100% of the entire range from high to low. So this is the thrust bar. This would be an excellent spot to be considering for a short, because we have a break of structure here via the thrust bar, right? That would be something to consider. And if you miss that, what are you waiting for? You're waiting for the return back to it, right? Because the premise here is that, well, one, right? I mean, that's a pretty good move right there, right? If you come out of that, what do we got there? 121 ticks, right? It's a pretty good move, right? Three candles moving abruptly, right? Almost no interruption, right? We just got a free fall here, and then we retrace back to it. So the premise is there may be unfilled orders here. Not every trader got the price they were looking for. So if we revisit back to this range, there can be orders in the book waiting to get filled. There could be bears here in this case that are defending those positions. Now again, that's not you, me, and Uncle Joe. That's traders with the size and the muscle and the capital to defend a position, right? So potentially you've got defense there, and then unfilled orders, and then just an opportunity here where the market went from imbalance and came back to balance, and then in this case the trend continues. Oh, you probably got Probably got a measured move there as well. Let's just take a peek and see if we got one. All right, we did, right? So here we're in between the 50 and the golden zone. Here you might actually have it here. So it's got a wick through. So algo would go back one. So here we tag the 618, and here we get our algo target. We actually got second target there. So there's a good example of how you might use that. Right? So we're retracing back to, in this case, what we're calling an order block. Now, one thing you'll note here, it stops here, just like these stop, because once it's mitigated, once it's been tapped into, we want it to stop. Right? We don't want it to run across the chart because it's already been tapped once. Now, if it were not tapped, right, then it would run across the chart like this one did. All right, we'll come back to that in a second. But note here again, here it is, drop, base, drop. We come back to it. You see it over and over again, right? So do you see how consistently these are being revisited? Oh, let's come back over here, because on the way up, I don't have any on the way up. Now, I probably have some that were broken, but I don't have any that are still active. Well, let's come back down here. Again, I'm just using the most recent data I can. So you see a series of them here, right? As we were looking at, now remember before we were looking at this as there were, in addition to there being order blocks here, there's supply demand zones here based off of chalks and breaks of structure. Right, but I just want you to focus on what we're defining now as an order block. So here, I actually get it twice here. Let's open that up so you can see it a little bit better. So I've got a rally, base, rally, and then again, within it, I get rally, base, rally. So I've got a pretty strong zone here. What happens, right, when we come back to it, right? So the fact that we have them stacked here, I mean, pretty good idea. And then you can see from both of them, right, the big imbalance, the thrust candle, which is implying imbalance here, right? So buyers are more aggressive, right? We don't get any sellers on board until we get to this candle. So you have these two big thrust candles, so it's not surprising. And then again, just another example of how you might use this in context of things that we already know, right? We're coming right back here. This looks like a one tick front run on the golden zone here, and then off we go. So just showing you how you can combine technique here, and then also you've got a channel break here. So for you price action traders, right, you probably got this here. Here's the break, the insinuation here, all right, for our trend line rules from our friend Al Brooks, right? With the first break, right, you never enter on the first break, never. That's a sucker play. That's what retail does. You're waiting for the odds are, right, and there's no absolutes in the market, but with a channel break like that, there's going to be one more thrust to break that low and get the new extension, and then we start back the other direction, right? You can see this repeated, right? I think I just showed you this one. Right? We could do the same thing here, right? You break it, right? They're going to come after that, right? This is the sucker play, right? That's what retail takes, the first break of the trend line. It's not the one you want. Okay, so let's come back here. Come off, and then I think that's end of the day here. So I think that makes a pretty good example of how you can see those and that distinction between what now. So now if I put it all together, if I start to add back, before we do that here, let me finish up. I'm getting ahead of myself. Let me finish up on the other new features here. So we've been over the order blocks, the way we've changed that in that language. We've been over supply and demand zones. The last thing that we've added to this are the fair value gaps. Right now, fair value gap. Here, let me find an easy example. Here I guess we can use this one down here. On the right here. This is a bigger one. They're a little easier to spot. So a fair value gap, if I open this up, draw it, right, for any of you that are not familiar with exactly what we're talking about, let me use my little polygon tool here. So here's the high of this bar. Here's the low of this bar. It's always between three bars. So when I have a gap between the high of this bar and then the third bar, the one, 2 bars over here, if I have that gap, that's the fair value gap, because again, it's much like a thrust bar. It's implying imbalance, right? The bulls were so aggressive here that sellers may not have gotten all their orders filled here. So we have this imbalance here. So when we come back to it, right, I mean, what a nice example, right? So when we come back to it, right, the potential for those orders to get filled from the book, right, or for bulls to defend, same idea. Heads up when you see that, right? So if you were considering this, oh, okay, well, of course here we come right into the tick, we come right into this order block, and then we get a thrust, right? So ideally, in this case, we get a thrust out of that with a fair value gap. When we come back to it, that would be one to pay attention to. And the same thing here. Now you can see here we break by a couple of ticks here. We get wicks through, but ultimately, right, we continue to carry on. Then we get another one here. Here, often you'll see them they'll tap it just by a tick. Right, here's the base, we come that's why it stops there, because it's been mitigated. Here, same thing. I get it up here. Here's, now, I don't know if you're trading at the end of the day on a Friday, but here's an example of it. This one is just stunning, right? Just stunning. Right, so, I mean, could that be useful to you? I think probably could. Right, now, so now if we put it all together, so now we've got supply and demand zones, order blocks, and fair value gaps. And then your choice of whether you want supply and demand zones off of break of structure, change of character, or both. Right. So let's turn them all on. So let's go back to show order blocks on. Let's go. Oh, here I want to show them on. Let's test it on. Let's keep that as it is. So we'll keep these 1 and 5. So we'll keep those numbers as they are with 50, 100. Again, those are good. Let's go to the break of structure and the supply and demand zones. Here we go. So let's go. This is currently set break of structure only. So now I'd have break of structure only, fair value gaps, and order blocks. Now if I go back to it and I go break of structure on change of character, now I've got, right, just change of character, not break of structure. Now I've got everything turned on. So here's what it would look like with with everything at full throttle, I guess we can say it that way. So you've got supply and demand zones off of candles, right? So it's going to take up the most amount of space. You've got order blocks and fair value gaps, and then you're showing supply and demand zones off of both breaks of structure and change of character. Right, so now, so for example, right, I mean, if you look down here, you'd say, okay, do I have a pretty good amount of support down here? Now, nothing says that couldn't break, but certainly if you were looking at that, you know, if you're checking the order book, something like that, odds are you're going to have, there's going to be buying interest down here, right? Because you have all of these order blocks down here where there's potentially, right, you might see volume in the book, right, because of unfilled orders, right? That might be a way to check that. The other is just recognize, well, shit, I think we looked at this before, right? Do I have, right here, right? Do I have the kind of retracement here that would be of interest here, making us a swing and a retracement to the golden zone, right? Is that potentially an area of interest? I would, yeah. So look at the confluence right here. So I've got order blocks, I've got demand zones, I've got a golden zone. Okay, right. So I mean, this is, so if you weren't comfortable with the initial visit, or maybe you got a scalp here and we came back down in here, so your scalp or your runner got stopped out at break even. Well, note, you get another chance at it. Right, we get the swing, we get the retrace, right, order block, and fair value gap. Right, up we go. Right, you missed that one. Well, here we get another one. Right, leads right to a break of structure, which is why we have this here. All the way back up, we run into, at the end of the day, what do we run into? All the supply. And we get a couple of order blocks down here. So there's a lot of new features here. Now, so just to remind you, let me take everything I've drawn off here. So let me just so we're clear on this, because I don't want this to be misperception on this. So let's take that off. So let's go back to order blocks on. So let's look at broken order blocks. Right, now remember, just because what you're seeing here, I don't want it to be like, oh, this is only the winning trades kind of a thing. If you have all the order blocks on here, there are of course going to be order blocks that break. Right, there would have to be, right, or we just go sideways. So keep in mind that an order block is just that. It's a potential area of interest where you might see a reaction, but certainly they can break. Right, I mean, here we get this is a slight break, but a break nonetheless. Slight break. Right, some of these, like this one right here, was there a trade there? Yeah. Were there a couple of trades there? Yeah, but eventually they break. Right, so just keep that in mind, that just because it's there doesn't mean it's not going to break, right? So if I come back and then I say, oh, let's hide them, and now we're just going to show, or do the same thing with order blocks, where we would just show those that are unbroken, or those so to be broken, it would have to go through the high here, right? So that's why it's still on the chart, because it's only been tapped into. It has not been broken, as in the break of the low or the break of the high, right? So just to make that distinction, so that you're not just pulling the trigger at every order block or every supply and demand zone. This is designed to be complementary to what you're already doing, or to be used in conjunction with what you're already doing to help identify where there's areas of opportunity. This is one more confluence point. Now, there's some that trade this exclusively, right? I'm not suggesting you couldn't, but personally, why would you, right? I would certainly still be using geometry. I'd still be using channels. I'd still be using looking for the algo. I mean, I had it on here before just to demonstrate how many measured moves got hit during the day. Right? I mean, this is, as you've heard me say in previous trainings, right, this is the DNA of the market. It's not why it moves, it's how it moves. So every one of these green lines, every one that you see is a measured move hitting its target. Right? I think there's 15 or 16 here within the course of any given day, right? That's how many times that algo gets paid. This one here, this is a big one here, right? These 50s and the golden zones, that's unhit, right? That target's down here. These, right? These here, their targets are up here. So at the close of the market, you still have some that have not realized their targets, but just the course of the day, right? And then you go back a day, right? I mean, that's, if you're not familiar with that, you need to be. Right? So you need to go watch some of our training. You can find it under auto fibs or measured move training at the top of the Ninja playlist. Right? If you're not familiar with that's some that you would want to be. Okay, so let me take that off here because I'm digressing here. So but there you go. I mean, there's some good examples here. Now, just as the case with all of our indicators, trial it. Trial it first, right? And maybe you already have trialed it here, and now what you're seeing here is like, oh, well, yeah, I got to get it. Now, one thing I'll tell you, the price is likely to go up because this is, one, there's nothing else like this, and two, we put a lot of work into getting it to this point. So I would encourage you, if you're interested in this indicator, you might want to take advantage of this here in the near term before the price goes up. Just a reminder that we do offer leasing. So if you're not sure, right, the other option is that you can lease it. So we give you 5 payments at 20% of the full cost. We do not discount on the leasing, right, because we're already giving you the opportunity to pay it over time. So that's one option. But I always suggest people start with the trial. You get 5 full trading days, not calendar days, 5 full trading days to work with it and see if it can complement or augment what you're currently doing. Then if you like it, well, again, I would encourage you to take advantage of it while the price stays where it is, and if that price point is too much for you, consider the leasing. And the reason we did the leasing is so that you don't end up with a bunch of indicators that you're not using, so you don't invest in this and 2 months later say, you know what, it's not working for me, right? Then you're not just stuck with it. Here you can cancel a lease at any time and try something else. Right, that was the whole idea behind it. So with that, I'll wrap it up here, and hope this is something that you guys find useful here. For those of you that already own it, you will of course be getting this update here at no charge, right? It's a lifetime license, and that comes with all updates that we add to it. I don't know if there's much left to add to it, but it's pretty full featured right now, so I would tell you to do some experimenting with it. I think you'll find it very, very helpful to your trading, and where you see these kind of opportunities, it may be things that you were just unaware of. You were kind of blind to them because they weren't being pointed out on the chart for you. So a few things to think about. Okay, I hope that's helpful, guys. And with that, I'll wish you good trading. We'll see you next time.